Hello, my name is Andrew Pang. Welcome to another edition of CMS Forex News. Today's Friday, October 3rd, 2008. Australia's inflation picked up in September, increasing 0.4% on the month, and the annual pace rose back to the 4.5% level from August's dip to 4.2%. It was the 8th straight month that the monthly rate increased. Inflation climbed due to the falling Australian dollar and comes despite the slowing economy and softer commodity prices. Also, activity in the services sector contracted for a sixth successive month in September, although the rate of decline eased for the first time since May. The PMI came in at 44.9 compared to the 39.3 in July. The Aussie-Yen pair rose after the inflation release after hitting support at the 81 level. In the European session, risk aversion brought the pair back down to retest that level, but support held. New York trading saw the pair climb again as U.S. stocks were positive, and it became clear that the House was going to and did pass the bailout rescue package, increasing risk appetite. Still, this pair is about 680 pips lower than where it started the week. In the UK, the services PMI fell more than expected in September, declining to 46 from August's 49.2. It's the fifth month that the sector has contracted, and is the lowest level since records began 12 years ago. Combined with the weak manufacturing report earlier in the week, signs are pointing to the Bank of England cutting rates in its meeting next week. In the Eurozone, retail sales climbed 0.3% on the month in August, beating expectations of a smaller increase, while July's data was revised up. On the year, sales are 1.8% lower, matching July's upwardly revised figure. In the U.S., the nonfarm jobs report was worse than anticipated, with the economy showing it shed 159,000 jobs in September. It was the biggest drop in 5.5 years. The unemployment rate remained unchanged at 6.1%. The data, along with the turbulence on Wall Street, points to the Fed lowering rates in its coming meeting, if not sooner than that. The ISM non-manufacturing index for September showed the services sector expanding, though only slightly. The index measured 50.2. The pound-dollar pair had an interesting and volatile session today. At the New York Open, the pair swung 140 pips in the dollar's favor, found support at 1.7560, and then rallied more than 200 pips to trade above 1.78. The euro-dollar pair fell to test 1.37, though rebounded somewhat in later New York trading. The dollar is set to have its biggest weekly gain ever against the euro as there had been a surge in demand for U.S. currency funding amid the worldwide credit crunch. The London Interbank Offered Rate, or LIBOR, that banks charge each other for 3-month loans in dollars increased to 4.33%, the highest since January. As mentioned before, expectations proved true and the rescue package passed the House today. Prior to the vote, Dow Index was up more than 250 points, though the markets paired some of those gains in the aftermath. The dollar-yen pair, after dipping to 104.50 following the jobs report, rallied to test the 106 level, which was close to the pair's high yesterday. With stocks easing back around 2 p.m. Eastern, so did the pair. Some highlights to look forward to next week include interest rate decision from the Reserve Bank of Australia and the Bank of England, and the FOMC minutes from the U.S. And that wraps it up for the week in Forex News. Tune in next week right here at cmsfx.com.